Hi guys, Lee Gettess here with the Market Sense for the week of August 14th, 2018. The charts in this presentation are provided to us by Gettess and the Trade Navigator software that I stare at all day long. This is a weekly bond market chart, and you can see they had a fairly nice week last week, closed up nicely, didn't even trade down to the support we were looking for, and got all the way up to the upper resistance. That makes this week look like it's primed to head to the 145.08 area, which that is looking like really good resistance right now. I'd love to see them get up there and then look at the shorter term charts to see if that's a sell. But of course, they got to get there first. And right now, the best support to throw them up there is in the 143.09 area, and they haven't been anywhere near that either. Of course, that's not unusual. We do have markets that just sort of stay between support and resistance and consolidate. If they didn't consolidate, they just trend all the time, and that might be fun, but it doesn't happen. And so we're looking for either for them to move to the 143.09 area, which I would look at as a potential buy, or see if they can get up to 145.08 and see if that maybe is a sell. If they break the support here, they could be going down closer to 142. That's probably 142.07 at the lower moving average. That wouldn't be the end of the world, but it probably would mean they're not going to 145.08 this week, and that this week will just consolidate the whole move. For now, though, the question is, can they move higher? I'd kind of like to see that. I think they probably will, but that's what trading's about. We monitor to see if they do what we want. Stocks, well, much different situation, of course, here. Last week went to new highs, but then closed back down just below where it opens, which is not a very positive sign. But this week, the support for them to hold was around 28.29, and they've been sloppy. They've gone as low as 28.20 so far, but they appear to be holding and look like they're trying to work their way back up. I have to say this is particularly impressive given the tariffs being added all over the place and the problems in Turkey and their lira. This is holding up pretty well in the face of some negative news. So obviously the first thing we're looking for them is to get to the 28.51 resistance. That's the upper moving average here. And that's not really tough resistance. Up here around 28.60 and near the last week's high is a little more interesting. But we still know they're awfully close to the highs for the year here in the upper Keltner channel above 28.80. Wouldn't mind seeing them get up there. Just not sure they can. Now, if they do turn back down, since they've been so far below 28.29, if they do turn back down, that's certainly possible. And then it becomes the 2800 area that we're really interested in. Might be worth buying there because the risk is relatively low. These lows here are all in the 2790 area. So if we try to buy them in the 2800 area, if they get down there, we only have about 10 points risk. So that's sort of intriguing. But at this point, they look like they're trying to work higher, and it's been a long grind up here since April, really. Nothing exciting, no excesses, no real blow-offs, just sort of a steady grind up. And as much as I think they might turn down from here, you have to be impressed with the relentless nature of this for the last few months anyway. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with.